You know, as we head into quarter four 2019, it's important that we look at what's going on in the marketplace. I know everybody's heard the looming rumors of recession is headed our way. And there are a lot of factors that are falling into that. Let's face it, we're looking at some serious trade wars with China. We're looking at serious changes in interest rates in all different directions. We're looking at stock market valuations that may be actually a good bit overvalued. We've got issues like Brexit that are going to affect the European Union and the English government. We've got issues in the Ukraine, India. We've got a new government coming into Israel, and we've got the possible Iran war and even talks of impeachment of our current president. We are facing one of the longest expansions of economics in the U.S. history right now. And we all know, if you've been through it before, that at some point there have to be some corrections. And there are a lot of important talking points in the corrections. We need to talk about our stocks. We need to talk about our real estate and our homes because let's face it, our real estate and our homes are the largest investments in our lives. And I put together a presentation today with some great statistics and facts that I hope will give you some fantastic insight into what's happening in the marketplace and what we can expect to see over the next few years. Of course, one of the first places that we look are what are going on with the current prices year over year. And if you look at this chart nationwide, you can see that consistently we are outpacing the typical market growth in every single category from east to west. And that's an important thing to consider in real estate. If you go in even a little closer and look at it on a state by state basis, you can see that all across the country, values are strong and they continue to be so. Even our lowest, Louisiana, is 3.12%. One of the most interesting aspects to look at how home prices change are to look at them by price range. You'll notice the lowest price homes are accelerating in growth more than the others. And as you get up to higher prices, the growths aren't getting quite as demanding as they are in the lower prices. And that makes a big effect on how things happen in the marketplace. Of course, year over year monthly supply is always an important thing to look at. And if you look at our charts, you'll see that actually the lower price homes inventories are growing faster. And that has a lot to do with millennials. Millennials are not buying the homes that need the fixer-uppers, that need the sweat equity like we used to do in the old days. They're looking for homes that are ready to move in. So we're seeing those lower price points increase in inventory, but there is good news there because the moms and pops of the world are buying those up, fixing them, and flipping them. Most important parts of assessing any economic condition is to talk to the experts and see what they're seeing from the statistical analytical perspectives that they study on a daily basis. We're going to look at a few of those, and we're going to look at how equity is playing into the marketplace here. For one perspective, we go to Molly Bosell, one of the chief economists at CoreLogic, who says home prices have increased steadily since 2011, creating record amounts of home equity, putting homeowners in a good position to weather any future downturns. Of course, average equity gain year over year per borrower is a great benchmark for seeing what's happening in the marketplace. You notice in 2011, we actually were the loser. But as we moved into 2012, we moved up 2013, an incredible pace, moved on and continued a very steady growth period. And even in quarter one of 2019, the average homeowner added $6,400 worth of equity to his home, making it a great equity position. So now let's look at tappable equity. And this is of all U.S. mortgage holders in billions of dollars. And of course, as we all know, in the early 2000s, things were strong, things were happening, and things were really peaking up. And then we saw the market crash. We saw things go down to 2.2 billion in tappable equity in 2011, which was our all-time low. But now we're jumping back up at a large pace, and we have a $6.3 billion average equity setup in our real estate market. That means our homeowners are in a great position no matter what comes at them. Conversely, of course, we like to talk about what's going on with negative equity, because negative equity can have one of the largest impacts on people in their real estate endeavors. Look back at 2010, and we saw 25.3% of all homeowners in negative equity, and that has gone down to today where we're seeing only 4.1%, and that bodes very, very well for the real estate marketplace. Dr. Frank Nothaff, chief economist at CoreLogic, says with incomes up and current mortgage rates about 0.8% below what they were just 1 year ago, home sales should have a better sales pace in the second half of 2019 than just a year earlier, leading to a quickening price growth over the next year. You've heard me talk in the past about Ralph McLaughlin, who is the CoreLogic deputy chief economist, and what he's currently saying is that we see the cool down flattening or even reversing course in the coming months, and expecting the housing market to continue to come into balance. So now let's take a look into what the experts are expecting and projecting for home prices over the next year. Looking at this chart, forecasting year-over-year percent price changes, we see a very solid and stable marketplace across the country. The lowest market expected in the country is Texas, with a 1.9% increase in values. But in general, every other state is outpacing the market average. So let's take a look at what projected home price percentage appreciation going forward comes from the big boys. Number one, let's look at the Home Price Expectation Survey, which goes out 4 years. Now, we do see it slowing down a little bit in 2020 and 2021, and then going back up in 2022. But in no case do you see a red negative. The Mortgage Bankers Association shows the same pattern. A great increase for 2019, a moderate increase for 2020, slowing down a little bit in 2021, and of course they don't go out into their 4th year. You look at Zelman and Freddie Mac and National Association of Realtors and Fannie Mae, they all say the same: steady growth for homes. Fannie Mae is a little bit more optimistic with a 5.4 for 2019, but in general, they all have consensus that things are going to stay in positive territory and we aren't going to see losses in our home market. So now let's get down to brass tacks and talk about the old dirty word, recession. And let's look at a few different things: who thinks it's coming, when, and what kind of effect it's going to have. So let's take a look at what Pulsenomics, Duke's Survey of CFOs, and the National Association of Business Economic members say, and what they think is the most likely time frame for our new recession. In the year of 2019, while Duke has a pretty good percentage, everybody else says pretty much no way. Most everybody looks at this to happen towards the end of 2020. Rarely does anybody look at 2021. And we all see after 2021 to be pulling out of it and rolling back forward with a great economy. So in this graph, we take the aggregate of Pulsenomics, Duke, and the NABE and give it in a more simplistic format. As you can see, 19% expect something happening in 2019. 40.3% expect it to happen in 2020. Even less at 26 in 2021, and dropping down to only 10% after 2021. So we got a pretty good fix on where our market is headed. Now let's take a look at home price changes during the last 5 recessions. Reds are the negatives and greens are the positive. And if you notice, 3 out of the last 5 homes move forward in a positive manner. The one of them back in the 90s was only a 1.9% decrease. Of course, everybody remembers what happened in 2008, and the market went to 19.7. A lot has changed since then, and we have a lot of new stuff to look forward to. So what is the probability of home prices being lower in the next 2 years? This survey from the Housing and Mortgage Market Review from September of 2019 shows that there is a very, very minimal risk of home prices being lower in a 2-year period. There again, making your real estate a great and safe investment. Another important piece of information came just last month from Mark Fleming at First American's chief economist. And he says if the 30-year fixed rate mortgage declines just a fraction more, consumer housing buyer power would reach its highest level in almost 20 years. And that's pretty astonishing. So it's no surprise. There's a lot going on in the world. There's a lot going on with our economy. There's a lot going on with our international trade partners. There's a lot going on with prospective wars. There's a lot happening out there in the marketplace. And of course, every real estate market is different, and you must speak with a local expert. Fortunately, we do have those types of experts all throughout the country and can help you anywhere that you're looking to buy or sell real estate, and make sure that you get the perfect advice, the best advice for you to help you achieve your real estate goals. As we roll into the last part of the year, our fall 2019 buyer and seller guides have just finished, and they're an excellent resource for anyone who's thinking of buying or selling in the current real estate market. You would have received one attached to any newsletter that you got from us, but please feel free to email me and we'll send you a free copy at any time. Thank you as always for tuning in to our special reports about the marketplace. We study our local and national markets every single day so that we can provide you with the best information and arm you with the tools you need to make excellent real estate choices. If you ever have any questions, my team and I are always available to help, and we'd love to talk to you.